All right, everyone. So this video is just about what to do on a day like today. If you're watching this later, we had a pretty massive gap down in the market, some wild action. So I'm going to go through kind of a multi-step process for what I look at when markets get absolutely wild as a swing trader and as a quant. So, what we do over at Stats Edge is we have on Sunday all the data gets run. Here's the setups to watch for next week. Here's entry prices, exit prices, is how you trade them. The Discord bot will alert you in real time whenever those things are hit. But that all happens Sunday night or Saturday night. On Monday morning, sometimes you get, as we go into the charts here, sometimes you get the Qs, not going to spoil it because they actually did okay, but the Qs gapping down. If you put pre-market on, we were down 6% or something at some point. So again, a bit of a shock to the market, a bit of 5%. Everybody kind of losing their mind, saying, "Oh my God, this is the end of days because of some AI that's better than some other AI." I don't know the details, but what do you do, right? Well, what do you do when you're in this situation? Well, first of all, you take a deep breath, you do a little meditation, you do a stretch, you go for a walk. Um, Joking, but not really, because there's a lot of people out there who panic in these scenarios and they get super worried that there's going to be some sort of epic crash and I'm going to lose all my money and that kind of thing. If you're worried at all, you're trading too big, right? Because this was a 3% down move in the Qs and a 1.5% down move in the SPY. This wasn't crazy. This wasn't a terrorist attack or the end of the world. So if you got really upset about, your holdings gapping down, you're trading too big. That's step one, right? Make sure you are mentally okay with what's going on. Step two is I sit out the open. I'm not interested at all in the opening candle. And this time, same as, so this candle, just like this candle down here, it's a good reason for that. Right? Perfect examples. In this candle, everyone's going, "Oh no, we're gapping down under support. Everything looks horrible. This is the end." And then they just bottom up all day. And then from there, we had this epic run. So on this day, I sat out the open. When it became obvious that they were buying up that price, I bought stocks. Anything that I had that hit a stop, I let it hit the stop. That's just part of the plan. So I bought a bunch of names, and we had this great run where a lot of my trades and a lot of the trades from the systems that are over at SatsEdge Pro, they did great. Now we gapped down again, right? So I got hit on a couple plays, like VST was one, right? That I closed here. This was a pretty sizable gap, right? It was not fun at all. It was down like 10%, but that's just part of it. But I also bought a bunch of names because of the same reason. I didn't panic sell anything. I sold everything according to the plan. And I bought up a bunch of names as we kind of rallied off the open. We spent the middle of the day chopping around. That's where I got involved. Now, that's kind of step two is while you're being calm, you generate a plan. You say, okay, and your plan should be, I'm going to stick to the stop losses I have in place. But then what do I do if the market starts to turn? What do I do if the market continues to sell? Try to figure all this out when the market is turned off, right? And you know what's going to happen. And then step three is you got to prep for tomorrow. And these type of days give you more information than any other type of day. And how they give you that more information is by simply just shooting out. This is a massive move in the S&P 500. So anything, for example, that wasn't down 1.5%, which is roughly what the SPY is down, that's a really strong name. So this is just a list of ETFs that I watch. You could grab a list of the entire S&P 500. You could grab a list of from anywhere and just start going through them. So for example, XHB is very interesting to me. XHB are home builders, right? Because again, the market was down, home builders gapped up and closed pretty well. So we're in this base right here. KRE is another one, right? Gapped up and then actually traded higher. So again, with the market down, makes it very easy to identify all of these big relative strength plays that are setting up. So I am very interested and focused on these next things that are coming through. And the reason for that is so if my algorithm says buy this home builder or buy this commercial bank or regional bank, Well, great. I'm just going to get involved because I've reinforced that for myself. And that's what I think people should be doing as well, is going through these names and saying, what was down a lot today? What was up a lot today, right? You hopefully religiously followed your stop losses. You got caught out of any positions that were relatively weak. You're still holding your positions. The ones that you're still holding that weren't stopped out are by definition relatively strong. Maybe you look to even add to those. And then in this case, you build a giant list and you say, these are the things that I'm interested. If this bounce that we had today holds, these are all the names I'm going to buy because they were relatively strong today. If we break down, this is what I'm going to get out of. So again, just overarching kind of idea and understanding for a multi-step process on kind of how to deal with crash days. Because if you're going to be in this game, there's going to be a lot of them. So you better have a plan. The people that I saw kind of freaking out on the internet, that's not the move, right? So you saw all the perma bears coming out and brag, right? You saw people going, "Oh no, the bull market's over," that type of thing. Just take a breath, kill everything in your portfolio that should go. Maybe add to the ones that are doing well. Maybe take a look around different sectors, which sectors were holding strong, which sectors were holding weak. Make a plan and then go from there. Where a lot of people see fear, most traders see opportunity.